Our system is designed to benefit business owners and investors. Yet we're taught to become employees. So if the system is designed to benefit business owners and investors, how come we're not taught to become business owners and investors? It just never clicked with me. That's one of the reasons why I started this YouTube channel, to help teach people the way the system works. That way you can become an investor or a business owner, depending on what it is that you like, because even if you work a job, you can still take advantage of the way the system works. So here's how it works. If you work a job and you make, say, $100,000 a year, the first thing that happens is you're gonna pay taxes. You make money, you pay taxes, and then you spend whatever's left. After you pay your taxes, you might be left with around $70,000. Maybe a little bit more, maybe a little bit less, depending on what state and city that you live in, but around $70,000. But if you are a business owner or an investor, things get a little bit flipped. Because now what happens is you can make $100,000, and then you get to spend the money, and then you pay taxes on whatever is left. And the nice thing here is, if, let's just say you have $70,000 left, well, now you're gonna have a lower tax rate because you have less taxable income. And on top of that, investment income has a lower tax rate than ordinary income, which is the income you get from your job. So you have a tax rate that you pay for the income that you work for, and then you have a separate tax rate for the income that you don't work for. And the income that you don't work for, your investment income, has a lower tax rate than your job income. So if you're an investor, you get the benefit of a lower tax rate and potentially less taxes. Now, if you're a business owner, you can spend this $100,000. And I'm going to give you a couple examples here because I have a couple companies. I have my briefs company, my market briefs, my business briefs, and then I have Minority Mindset, which is my personal brand. Well, for my personal brand, I have to buy things like my cell phone. I have to have things like my laptop. I have to go on trips, that's flights. I have to rent Airbnbs. I have to go out to dinners and meals and lunches with my team. All of these things are tax deductions for me. They become deductions against my income, which means I earn the money, I spend money on the meals, I spend money on the travel, I spend money on the things that I need to run my business, and then I pay taxes on whatever's left. Like I spent the last month and a half in Manhattan, in a beautiful Airbnb, in a beautiful part of downtown Manhattan, and it was great. I got to go out to some of the best restaurants, had some amazing business meetings. I was there for work, I was meeting people, I was networking, I was doing a lot of interviews, doing a lot of stuff over there for work. But all of these travels, all of these things that I did were tax write-offs for me because the tax code says that you can do that. Now, you can't do that unless you understand it. Now, once you understand it, now you can start to see, how can I create something like this for myself? There's a few different things that you can do. Now, at the kind of base level, the first thing that you can do is see, maybe I can start a side hustle. Because if you can create some sort of 1099 income or a side hustle income, well, now you just created your own business. It might not be $100,000 a year or $1 million a year. It might only be a little bit of income. But to run your side hustle, you might need a laptop, you might need a phone, you might need a car, you might need to put gas in the car. Now, these types of things start to become write-offs. They can help lower your tax liability as long as you use it for your business. Then maybe you take it one step further. Now maybe you're trying to start a business. Now you can start doing a whole lot more things in terms of taxes. I don't recommend starting a business because of taxes. Start a business because you love the idea of producing some value, of creating a product. The taxes are kind of a byproduct benefit, because if you hate the idea of starting a business, well, you're gonna hate this whole stuff, because yes, you get a lot of tax benefits for running a business, but it's also another headache of managing the taxes. You need to make sure you have a good accountant, having a good bookkeeper, having the right systems and processes in place to manage all your income. Because if you're doing this type of stuff, well, the IRS is watching you, so you want to make sure that you're doing everything in line with what the rules say. So you want to make sure you actually enjoy this and you're not just doing it because of the taxes. But now, going aside from the business side, if you're not creating your income, well, then you can also have your assets pay for your income. If you invest your money in the stock market and you can grow your money in a couple of years and make $100,000 worth of profit, well, this $100,000 worth of profit is going to be taxed way lower than the taxes you would pay if you earned this $100,000 from your job. Why? Because it's a different type of tax, it's a different type of income. Your job income is called ordinary income. Your investment income is capital gains. They pay different types of tax rates. And capital gains top tax rates right now are 20%. maybe a couple other percent if you're making over $1 million a year, but around 20% is the maximum that you can pay. So if you make $10 million or $1 million from your investments, you're going to pay 20% in your capital gains taxes, versus if you made $1 million from your job, well, you're going to pay a lot more than 20%. You're going to be paying close to half of that in taxes. And then if we go into real estate, now it gets even more exciting, because now when you start generating income from your real estate, you have other tax breaks and other tax deductions, which will allow you legally to keep cash in your bank account and tell the IRS that you made $0 a year in profit. This is something called depreciation. This is where now you can tell the IRS every single year, yeah, I made a few $1,000s worth of profit, but my building is 1 year older. And because my building, my investment is 1 year older, I deserve a tax break, a depreciation deduction, that's what it's called, which now says on paper, it's called a paper deduction because you have the cash in your bank account, but on paper to the IRS you say, yeah, I made a few $1,000s for the profit, but I need to get a $3,000 deduction for the value of my property because my property is 1 year older, and now you pay less in taxes even though you still have the cash in your bank. And then if you go and sell your property and you made $100,000 of profit, so you bought your property for $200,000, you sell it for $300,000, you have 100 grand of profit. Well, if you take all 300 grand and you invest it into a bigger property that's paying you with more cash flow, that's giving you bigger tax breaks, you pay $0 in taxes on the $100,000 today. And you can keep flipping it year after year after year. You have to hold it for longer than a year, but you can keep doing this again and again and again, keep buying bigger and bigger properties. And if you do this until you die, you never have to pay a penny in taxes. This is where it pays to understand the system, because it's not how much money you make that matters, it's how much money you keep. And one of the biggest expenses for people is taxes. And this is where now you are incentivized to invest your money. You're incentivized to start a business, but most of us are never taught this. And this is where it pays to understand the system. That way you can use the system to your advantage, but you can't use the system to your advantage if you're never taught how to do it. This is why I say that everybody in America needs to be a business owner. This doesn't mean that you need to operate or manage a business, because most people should not be in the business of operating or managing a business, but everybody needs to be a business owner. How do you be a business owner? Well, you can invest in the companies. When you invest in the McDonald's company, when you invest in the Amazon company, you become one of the owners of these companies, and you get to share in the profits with your equity, because now you have equity in these companies. It's the same thing when you start a side hustle. That's another way to do it. If you want to be more actively involved, you can start a side hustle, take advantage of some of these things, and start creating your own income. This brings me to number 3, but before I go into that, if you are an entrepreneur, if you have a business, and you want to stay up to date on what's happening in the business economy, you want to see what's happening in the entrepreneur trends, what's happening in the business world, I created a free newsletter called Business Briefs, where my team is breaking down what's happening in terms of innovation and funding and the startup economy, that you can read every single day, Monday through Friday and Sundays. We break down all the things that you need to know. That way you can run your business even better. So if you want to join Business Briefs for free, I'll get the link to how you can do it down at the description below. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.